Julie, we have deja vu. I'm on Yogi Berra watch. We got deja vu all over again. Are we pivoting? We were supposed to pivot back, and that's why we had that July rally for hopes for that. Are these false hopes again, or is the economy in a different place where a pivot might be something to think about?
I think these are all false hopes again. I think every single Fed member that comes out there is pretty firm in saying they want to see rates higher, mostly because they want to see inflation be softer, meaningfully softer. And I think that makes sense, right? Nominally, we're at a pretty high level. And employment is still very healthy and strong. And so that really buttresses their argument for continuing to raise rates, because as they see it, we don't want to enter the 1970s of stagflation, where we take our foot off the gas, inflation roars back, and it just causes a lot of uncertainty and turbulence in the markets.
These jobs numbers, whenever we get them, they're already old. And I just wonder if there's any humility in any members of the Fed, including Jay Powell, on the transitory stage that we were in and how certain they were at that point. I would question my certainty now that I know everything that's happening and I'm going to do this no matter what. Didn't they learn from, they don't know. Didn't they learn back then that they don't know and should be more data dependent?
Yeah, I mean, I think I agree with you, but I actually think that they're actually going to be chastised in the other direction, where the mistake that they now want to make is to over-tighten because they were caught so flat-footed.
It's just the economy we're talking about. You know, it's just
but
people that are
again,
working.
I think it's really important to remember that it's the dual mandate is inflation and employment. It's not the stock market. So I think it's pretty critical to remember that. I'm
not thinking about the stock market at all. I'm thinking about, you know, we got this nice employment rate right now, and we've got some wage gains, and they're perfectly willing to go to 4, 5, 6, 6.5% unemployment. Oh, sorry, you've got, you know, we've had crappy policies, fiscal and monetary, but all, you know, you people have no jobs now, but we need to do this to fix things. I don't know. That seems like no way to run a country. What do you think, Ken?
So at the end of the day, I think we'll get
at the beginning of the day. Well, anyone talk about that?
Look at it this way: 75 basis points is coming. It's built into the market already. So far, it's had no effect on inflation. Still north of 8%. So why would the Fed stop? I think people that think the Fed's going to pause are dreaming. And so, as investors, you have to make a decision. You can't time the market. You know with certainty that there are days when you make 2.5%, 3% gains. You just don't know which ones. And at some point, and I don't know when it is, maybe it's Q1, you're going to get a signal from Powell that he's going to slow down. And on that day, if you're not in the market, you'll lose 30% of the gains of what's going to happen. So I have no choice but to, I can't control the Fed. No one can control the Fed. I'll tell you one thing that's not disturbing me, that is really perplexing me. I have data every week on top-line revenue and cash flows of private companies, over 50 of them. We are supposedly slowing down. We're supposedly in a recession.
But you don't see it.
Nowhere. Nowhere do I see it.
Right. So there's this very weird irony, which is that all these CEOs say, actually, I don't feel it right now, but I think it's coming later. And that's where you are.
Well, the Fed is, in its dialogue, telling me to reduce my CapEx, telling me to reduce my inventories, telling me to stop hiring people.
And by the way, that seems to be working.
Well, yeah, except I don't see it. I should see it. I get weekly revenue. I get weekly cash flow. We've had the best quarter ever, 17.5% pre-tax cash flow, when before the pandemic it was 15. The economy is still working. So, you know, it can take another 75 basis points.
Julie, where do you see inflation ingrained? Is it, I guess it must be labor market. And, you know, here we go, OPEC, they're not helping. That we could, you know, see the energy complex reemerge as a real problem. But other than that, it's in this weird labor market, post-pandemic labor market. Is that the way it's going to be for good now? It's going to cause a wage price spiral, or is it just going to slowly dissipate and we'll go back to normal?
I think the largest challenge actually is that it's in shelter, and that is so slow to reset. And the thing is that if you think about where we are in terms of housing market, sellers are not really ready to reduce their prices, even though affordability has absolutely collapsed with mortgage rates where they are. And so it's going to be very hard for people to kind of trade in and out of their shelter. And so that high pricing is going to remain pretty sticky. So I think that's actually the biggest challenge, is that without shelter getting meaningfully easier for people, you can't avoid spending on shelter. I understand that everyone is excited about apparel being super discounted because we have so much inventory. But the fact is that people can choose not to buy new clothes. They need to live somewhere. And so I think that's why the Fed is so concerned about inflation, is because it's in stickier categories like wage growth and shelter.